Four banks, all famous, all huge, all sitting in millions of Indian investors' portfolio. But right now, as of March 2026, all four are not equally performing. So my analysis reveals one is clear buy, patient wait, slow bleeding, completely avoid. I'm going to tell you which is which, the real numbers, no tip, no guess, just complete data. So before that, if you are new to my channel, please do subscribe it. So without wasting any time, just get into the video. Okay, what are all the four banks? Number one, HDFC Bank. This is India's biggest private bank, which is merged with HDFC Limited in 2023. And the price today is 815 rupees. It is down from 20% from its high. The second bank, which is ICICI Bank. This is the second largest private bank. It's a financial ecosystem. It has banking, insurance, AMCs, and brokerages. And the price is 1307. It is also down from its high, which is 13%. The third bank, which is Axis Bank. This is India's third largest private bank. The turnaround story is in progress. It is trading around 1200 rupees. But actually, this is 24% up in one single year. And the fourth bank, which we're going to talk about, is Kotak Mahindra Bank. This is premium conservative bank. That is a new CEO in 2023. This is exactly after 1:5 stock split, and the price is like it is trading around 372 rupees. Completely a flat year. They are all part of the same sector, but each one has very different story. But let's find what are all they. I would like to start with the fundamentals. I'm going to compare 5 key metrics, which is actually tells like how exactly the bank is healthy. The number one is ROE, the return on equity. How hard the bank is working for your money. ICICI Bank, it has 17 to 19%, which is best in class. Axis Bank has 16.5% in the financial year of 2025, but it slipped to 12.8% in the Q3 financial year of 2026. HDFC Bank, it has 13.6% in Q3 financial year of 2026. Kotak Mahindra Bank, it has around 10.7%, which is lowest in all four, and it is completely falling. So here is ICICI Bank is leading. Number two, net interest margin. The profit spreads on every loan. Kotak Mahindra Bank, it has around 4.8% here. This is highest in the four of them, but it is compressing quarter by quarter. ICICI Bank, it is having around 4.2 to 4.4%. This is something like it is stable and strong. Axis Bank, it has around 3.64%, which is completely declining. HDFC Bank, which is lowest, it has around 3.35%. This is a direct fallout when they merged with HDFC Limited. Here, the Kotak is on headline number, but trend is completely wrong. So I can see ICICI Bank is strong and stable here. Number three, we have to talk about something on gross bad loan. This is the lower is better here. HDFC Bank, it has 1.24%. This is something cleanest book. Kotak has 1.30%. Axis has 1.40%. ICICI has 1.53%. All four are actually healthy here. Everyone passes here. I see HDFC Bank is marginally best here. So there is no red flag across all four companies. In Indian banking, it is one of the best NPA cycle of the decade. Number four, we are going to talk about current account and saving account ratio. This is like low cost deposit, higher means cheaper funding. Axis Bank has 39%, which is completely strong. Even ICICI Bank has 39%. Kotak Bank has 40%, but it is slightly falling. HDFC has 32%. This is completely declining post-merger. This is the real problem of the bank here. Here, I do see Axis and ICICI are winning here. Number four, which is super crucial. This is called credit to deposit ratio. This is like how much deposits are deployed as of loan. Healthy range is 75 to 78%. ICICI has 83.8%, which is completely healthy here. And Kotak has 83%. This is too good. Axis has 85 to 88%. This is also good. HDFC has something around 95 to 99%. For me, this is a huge red flag. The merger is the main reason for this issue. The merger blew this ratio out of shape. They can't aggressively grow loans until they solve this issue, until this normalize. So here HDFC is the clear loser. and I do see Axis and Kotak are winning here. When you look at the overall fundamentals, ICICI Bank, it leads here. Axis is second, HDFC is dragged by the merger hangover, Kotak is falling behind ROE despite a premium franchise. So let's talk about something on debt and capital safety. For a bank, there is a metric which is called capital adequacy ratio. It's usually called as CAR. Think of it, the cushion that protects the bank. This is like when the loan goes bad. RBI minimum is 11.5% here. Let's start with the Kotak Mahindra Bank. It has around 22.6%, which is extremely safety. But too much idle capital is equal to low ROE. Let's see what HDFC has. It has 19.9%. This is also very strong. ICICI Bank, it has 17.3%. It's a solid, well above the minimum. Okay, we are left with Axis Bank. It is 16.6%. This is lower of all four, but it is in comfortable position. But still very comfortable. Here, all four banks passes. No bank is anywhere near distress. But here is the nuances. Kotak Mahindra Bank, it has around 22.6% of CAR. This sounds great, but the extra capital on the bank, which is sitting idle, it is actually hurting the shareholders. It is the main reason where the ROE of that bank has 10.7%. A bank overholding capital and underdeploys it, their returns it completely suffer. HDFC Bank is also actively reducing the debt the post-merger. They cut the borrowings by 1 lakh crore in the last quarter of financial year of 2025. This process is already ongoing in their bank. The capital check is everyone is safe. So there is no fear for all four companies. Now, we will be talking about something on cash flow, where exactly the profit is going. For a bank, the cash flow says one thing. Is it growing, shrinking, or stable? Let's see. When you look at the HDFC Bank, the profit is completely growing. This is up by 12% year on year in Q3 financial year of 2026. But a big chunk, it came from low provisions and non-core items. This is not a pure business growth. The loan growth is which completely slows the CD ratio, which is credit to deposit ratio. Their core engine is in repair mode. Let's talk about the ICICI Bank. The profit, it slightly dipped in Q3 financial year of 2026 from 12,833 crores to 12,538 crores. But here is why. RBI ran an annual supervisory review and it asked ICICI Bank to set aside an extra 1,283 crores in provision as a one-time measure. That is a regulatory order. It's not a business problem. When you strip that out, their core operating profit is growing cleanly. Their EPS is expected to grow from 63 rupees in FY 2025 in financial year of 2025 to 87 rupees in financial year of 2027. This is 15% of the compounding. When you look at the Axis Bank, in 9 months of financial year of 2026, the net profit is already down by 10%. The provisions are elevated. The recovery story is real, but the financial year of 2026 is a transition year. It is expected that financial year of 2027 will be better for this bank. Let's talk Kotak Bank. The 9 months of financial year of 2026, the profit, it fell to 22.6%. This is not a small dip. That is a significant earning contraction. And the bank has completely stopped giving the growth guidance. So that particular combination, falling profit with no guidance, this is completely concerning for the value investor. And the bank is at the premium valuation. If you rank the cash flow of the bank, I do see ICICI is coming first and HDFC, Axis, and last we do see the Kotak Mahindra Bank. It's time to talk about the governance and the promoters. The governance is all about who is running the bank. Can we trust them? Let's see. Let's start with the HDFC Bank. There is no promoter post-merger. It is completely a professional management. There is one FIR against the CEO Shashidhar, which was filed in June 2025 involving the 2 crores of transaction. It is not completely proved and the case it isn't pending. We have to watch this closely, but do not panic. ICICI Bank, it had one of the worst private bank governance crisis in 2018 when MD Chanda resigned over a conflict of interest allegations. Then the Sandeep Bakshi took over the bank. Since then, the GNPA, it completely fell from 8.5 to 1.5%. The governance has been rebuilt from the ground up and the bank culture, it has transformed completely. It has zero promoter. It is completely managed by the institutions. An institution holding is like FII and DII, which is like mutual funds and LIC. These are the smartest long-term investors and they are not leaving it. So let's talk about the Axis Bank. This is also a promoter free. the MD, Amitabh Chaudhary, he drove a genuine NPA cleanup from 2019 to 2025. It is a clean governance, no controversy, and the strong institutional, they're holding around 85%. Let's talk about the Kotak. Uday Kotak, who is the founder of this particular bank, and he's holding around 29.5% and is one of the India's most respected banker, the decades of clean and conservative banking, but he stepped back from an MD role in 2023. The new CEO, Ashok Vaswani, is still unproven, and RBI has blocked the Kotak from onboarding a new customers from online and issuing a credit cards in 2024 due to IT gap. That ban is completely lifted, but it hurts very badly to the bank. When you look at the governance ranking, ICICI and Axis, it seems better, and HDFC is somewhat okay, and the Kotak has a traditional risk. Now, let's talk about the technicals. I will be using 50 and 200 EMA. So we will be moving to the charts now. All four banks are in weak market right now. So let's start with HDFC. So the HDFC Bank is trading around 815 rupees. The EMA of 50 is around 920 rupees. The EMA 200 is around 960 rupees. Stock has even broken below weekly 200 EMA. That is a rare and serious bearish signal for this particular bank. Here it's 52-week low of 812, which is at 812. The trading view rates it is a strong sell. There is no technical recovery, so we have to wait. Now let's talk about the ICICI Bank. So it is trading around 1307 of 50 EMA, so 1307 at 50 EMA, and EMA of 200 is 1401. The price is below both death cross territory, but RSI is near 36. This is approaching a oversold. The 52-week low support is at 1208. The correction is measured 13% from its peak. Not a breakdown. Most controlled pullback of all four. So let's talk about something on the Axis Bank. So this is trading around 1220 rupees. Relatively stronger chart of all four. The stock bounced significantly from its 52-week low near like 970 rupees. It is much closer to reclaiming its EMAs than HDFC or ICICI. Had a strong 4.5% single day bounce in Q3 results. The momentum for this particular bank is turning. So now let's talk about the Kotak Mahindra Bank. The Kotak Bank is trading around 372 rupees. The EMA at 50 is like 418 and EMA of 200 is like 418. The both at the same level. The stock is in the prolonged flat to down grind, no momentum. The hovering near 52-week low of 370. Technically, the week chart of all four. This particular video is shooted on Friday, so there will be a change in the numbers. Please do check the chart properly when you are doing an investing. Okay, now the technical ranking. Here, what exactly I do see is like Axis is far better. It is gaining some momentum, and ICICI is okay. And HDFC is also okay, and completely not okay is Kotak Mahindra Bank. So let's talk about the valuation and my honest opinion of this particular bank. So let's start with the HDFC Bank. So HDFC Bank has something around 16.5 PE. This is historically trading around like 20 to 25 PE. This is cheap, but the valuation is justified by the structural problem. It has something like high CD, high credit deposit ratio, and low net interest margin, flat on the loan growth. This is something like a value by a 2 to 3 years of time horizon. Most of the analysts, they says it may hit in between 1050 to 1200. Let's talk about the ICICI banks. This has around 17 PE. I feel like this is like quality at discount. The historical average is 19 to 20. So this looks like we are getting an India's best run private bank below its own historical average. So most of the analysts, they are targeting around like 1470 to 1720 rupees. This is up from 15 to 30% from its current level. Axis Bank, it has around like 15.8 PE. This is cheap of all four. There is a real turnaround story for this. Financial year of 2026 will be noisy for earnings. We have to wait for Q4 2026, which is in the April. If the profit confirms the recovery, this could be the biggest gainer. So most of the analysts, they are targeting it may hit something in between 1440 to 1650. We have to talk about something on the Kotak Mahindra Bank. It has something around 20 to 27 PE. This is one of the most expensive of all four, but the ROE is just 10.7%. The profit is down by 22%. This is something like we are paying for the one of the weakest current performance. The franchise is premium, but the near-term number do not justify the valuation. Target only on 510 rupees on just a split adjust basis. This is like barely 35% from the upside with far more risk than the others. My honest opinion here is ICICI Bank, it is in the buy range. It has a best risk reward. It is a quality franchise at the best average valuation, at below average valuation. It can accumulate in between like 1,280 to 1,360. When you look at the Axis Bank, it is a buy on confirmation. We have to completely wait for Q4 financial year of 2026. This is completely clean. Then we can buy aggressively. This is in the range of 1,150 to 1,250 something around. HDFC Bank, this is also too good, but we have to sip slowly. This is completely cheap, but the recovery is 18 to 24 months away. We have to sip between 800 to 870. We should not park entire money on this bank. And Kotak Mahindra Bank, this is completely avoid. It's an expensive, uncertain management, declining profits. We have to see when exactly they are getting a proper profit. I hope you might have liked this comparison. If you liked it, please do like button. And if you have any thoughts, please do comment on the comment sections. I'm happy to read all your comments and reply it. We'll see you on the another good video. Till then, bye.